Welcome back to Instables, everyone. Again, going over our intraday swing and long perspective as we're leading into next Wednesday's Fed rate hike after this morning getting a gap down, again opening lower here after closing higher here, again opening lower here as we had the number one shareholder of Swiss Bank mentioning that Swiss Bank could have a possible default, that Swiss banks have no help to offer. So we did have a gap down on that. Again, the number one shareholder, again Swiss Bank, with $578 billion in assets that would be failing compared to the last two banks that we had failing at $319 billion, would be a huge asset failure. And again, in 2008, we had a huge bank failure as well with 25 banks at $373 billion. That is only, again, about 50 to 60 billion more than we have now in assets failed. So again, very cautious, making sure that we are not going to continue on lower. From our channel that we had, that we were mentioning here, we had this continuation on this rejection, and now we are looking to see if we will continue on with this rejection or if we will possibly bounce back. And lastly, as we price in a 52% chance now, just going into extended hours, of a possible rate pause after these two bank failures, where exactly may we be headed next? What exactly are we expecting from our intraday swing and long perspective? I'm going to go over exactly what we're looking for here. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you want to see pre-market news that you want to be watching, if you're looking for data sets that you want to be watching, for example, 30 minutes before market open, the market very much does react to certain data sets and you didn't know that they were coming out, or 30 minutes after market open, if you guys are trading out the gate movers, or just looking for those major volatile breakouts on news that we mention every single day in the Instables room, go to instables.com in the description below. And for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the SPY with you guys here, looking at our intraday perspective off the bat, again, looking at our daily candle structure so we can anticipate what may be happening going into tomorrow, again, as we have been keeping an eye on our Fibonacci lines. Again, yesterday mentioning that we would possibly continue on higher based on today's PPI move, or possibly have a pullback based on today's PPI news. However, we had unexpected news coming out early in pre-market. We also mentioned in the Instables room, again, this morning, the number one shareholder of Swiss Bank mentioning that there is no help. That means there is a possibility of a default that, again, is only a possibility. And we did have a pullback. And again, European officials giving us more assurance that there would not be a default. But again, no certainty here, of course, as we had two banks just fail in America. So again, we're still very cautious, although very much having a bounce back here, looking to see if we can hold above our fib line here at 382 if we are going to continue on higher. Again, closing higher here on our green candle as we open lower here on our gap down from yesterday's close. So again, intraday, we want to see if we can either continue on above 391 or possibly get that bearish candle structure set up. If going into tomorrow, for example, we have a doji candle coming out, and then, for example, going into the next day with quad witching, which is a large expiration day, one of the largest expiration days of this year. So if we had a doji candle coming out, for example, or if we had a possible continuation with a large doji candle, possible rejection candle, and then we had a possible momentum candle to the downside, that would be a possible continuation with more room to run below our 0.382 fib. So again, keeping an eye on our 0.382 fib, how we hold it, and if we get that retest on our 20-day, if we are going to continue on below our 200-day moving average here that we have been keeping an eye on. Again, the watch here really is if we get our 20-day to cross back above our 50 to possibly get that bullish candle structure. That will be the larger reaction moves that we're looking for. Or we are looking to see if we will get that possible bearish candle structure drop below our 200-day as our 50-day crosses below our 200-day, which will give us that ultimate bearish candle structure possibly to the downside and giving us confirmation on larger reactions to the downside. So again, looking for larger reactions will be the watch here. Very much watching our 0.382 fib here at our 391.41 level. Now looking at our weekly chart, again, we have been keeping an eye on our weekly chart for one major reason, and that has been because our 20 weekly moving average finally did cross above our 50 weekly moving average. We had not had that happen throughout the duration of our sell-off. As you guys can see, we dropped just below our 20 and our 50 weekly moving average. We mentioned again the last couple of days that this solid candle that we did have spiking into our 50-day moving average would be a possible rejection candle that would be continuing to be formed from our continuation below our 20 and our 50 weekly moving average last week. So again, this candle still closing on the week, mentioning the last couple of days that we could get that rejection point here with that wick, and that's exactly what's happening here. Again, watching this candle structure as we are building out here is key as we are looking at our intraday perspective. So again, that's why we had this pullback for the last couple of days, in my opinion, testing our 50 weekly moving average, looking to see if we will possibly close this candle with the rejection or with the full body into our 50-day for that possible bounce back will be the watch here on the weekly chart. That will be our swing perspective. But again, overall, leading into next Wednesday's Fed rate hike will be the bigger watch. If we get a possible rate pause, that will be bullish, but how bullish will be the question. And again, with the possible rate pause, with the job not done, as Powell has been mentioning literally 2 weeks ago that the job is not done, that employment has been causing inflation. So with the job not done, pausing rates, not cutting rates, does that mean we have more things to come? Again, keeping these banks on watch is exactly what we're going to continue to do to make sure that we do stay on top of this momentum. Again, if we happen to have more banks failing, then this rejection just below our 50-day will very much be a continuation on lower, with our 20-day simply crossing just below our 50 with the false possible continuation on here. But again, we never got our bullish candle structure above our 20-week moving average for that continuation. So again, we are still on watch for that candle structure here, if we are going to continue on higher, or if we will get confirmation on that continuation on lower. We have tested our 200 moving average prior, however, very much getting a rejection on our trend line here that we did mention intraday again. So very much cautious, looking to see if we get better bullish candle structure, looking for more confirmation to the upside if we are going to continue on higher. Very much being cautious to the upside. As you guys can see on the monthly chart, as we mentioned prior, we got this rejection on our 20 moving average. We would possibly continue on lower. That's exactly what happened here. We continued on lower, retesting our 50-month moving average here, looking to see if we would possibly continue on higher if we are going to continue on with this rejection that we have here on our 20 monthly moving average if we are overall in a bearish state. However, if we are going to continue on bullish from our swing or our long perspective here on a monthly chart, then we will close above our 20 monthly moving average, and we will cross with our 12 and our 26 crossing higher here on our MACD. Again, still crossing lower here, still assuming that our overall momentum has been to the downside. However, considering that we can still have possible long-term momentum to the upside since we have been decreasing in sell pressure is the watch here. If we do start to curl up, we will have even more of an eye out here, but until we do cross higher here, we are overall still within a bearish state. So again, that is our long-term momentum at this point in time. Very much cautious. Now to recap on our intraday perspective, again, looking at our 391.41 level as we have been mentioning at our 0.382 fib will be key. Again, yesterday testing, not closing above or giving us any bullish or bearish candle structure above or below our resistance here. So again, very much testing our 200-day and our 0.382 fib, and very much getting that gap down this morning with Swiss news. We will keep bank news on watch. We're not exactly sure what to expect each day into the next until we do get that rate pause and we get that possible confirmation on soft landing from Powell. That will be the watch if we are going to continue on higher on that rate pause. For now, we are cautious as our 20-day is crossing below our 50, and we are making sure that we are not going to continue on below our 50. If that does happen, very much going to be looking for that confirmation on bearish candle setups to the downside. This will be the watch again as we have a 52% chance of getting a rate pause leading into next Wednesday. Again, midday today, we actually had a 60% chance of a possible rate pause. That was pretty high. That was after our major bounce that we had midday. We'll see exactly what happens. Now, again, with that said, if you are a day trader, if you're looking for pre-market news before market open, we mentioned pre-market news before market open every single day, 2.5 hours before market open. Any data that you want to be watching, any pre-market news on very volatile movers, any major breakouts that you want to be watching throughout the day, go to instabills.com in the description below. And for only $15 a month, you will never miss a breakout alert today again. And again, all of you Instabills, I appreciate every one of you for supporting the channel, continuing to take with market gives us leading into next Wednesday's Fed rate hike. Very cautious with this bank news that we are keeping on watch. I will be posting any updates, of course, in the Instabills room if we get any major updates. If our Fed rate percentage here changes in any major way, I will post that as well in the Instabills room. Very key leading into next Wednesday's Fed rate hike. One of the most important Fed rate hikes that you will be watching, in my opinion. We will see exactly what happens. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.